In the last 24 hours, the job market just sent a shockwave through the economy, and the paper silver market is in a total meltdown. On February 5, 2026, we saw a brutal 13% to 16% plunge in silver prices, dropping as low as $76. But while the paper hands are panicking, the lead investigators are looking at the forensic evidence. The mainstream media is blaming the silver crash on weak demand, but they aren't telling you about the smoking gun, the fresh labor data that just hit the wires. U.S. job openings have plummeted to a 5-year low of 6.5 million. At the same time, jobless claims have spiked to 231,000, and a government shutdown has delayed the official January jobs report. We are witnessing the early signals of a recessionary reset, and the big banks are using this labor chaos as a cover to liquidate paper positions and shake you out of your physical wealth. By the end of this briefing, you will understand why $76 silver is not a sign of failure, but a mechanical reset of the paper system. You will see how structural demand from AI, solar, and EVs, which need record amounts of silver in 2026, is colliding with a failing job market. This is your wake-up call to understand that physical stacking is the only true insurance against the employment downturns and wealth transfers that are being triggered by this politically charged economy. The algorithm is working overtime to suppress these recession warnings. They want you distracted by political headlines so you don't see the M2 money supply shifting. To prove you are a real person and part of the resistance, comment "Wealth Unwired" and the word "safe" below. Let's show them how many of us are tracking the real math while the paper world burns. On February 5th, the JOLTS report delivered a crime scene for the American worker. Job openings fell by nearly 400,000 in a single month. For the first time since 2020, there are more unemployed people than there are available jobs. This is the mathematical certainty of a cooling economy. When companies stop hiring, they stop spending. The big banks know this labor trap is springing, so they are dumping their paper silver contracts to raise cash. They are trying to make you think silver is losing value because the economy is weak, but they are ignoring the fact that the digital economy, AI, and the energy transition cannot function without the metal. Why did silver plunge 16% while the physical market in Shanghai is still holding a premium? Because of the CME margin hike. On the same day the jobs data hit, the COMEX raised margin requirements from 15% to 18%. This is a long squeeze. It's designed to force people who borrowed money to buy silver to sell everything at once. This created the waterfall candle that pushed the price down to $76. But look at the forensic volume. Every time the price hits that $75 to $76 zone, a massive wave of buying comes in. This tells us the $76 level is a floor made of physical demand, not paper speculation. Despite the recession noise, the structural demand for silver in 2026 is at an all-time high. AI infrastructure. Data centers are consuming 5,252% more power than in 2000, and every server rack is packed with silver-bearing connectors. Solar PV. Global capacity is hitting 665 gigawatts this year, requiring over 120 million ounces of silver. EV revolution. Electric vehicles use 67 to 79% more silver than old gas cars. The paper price is reacting to people losing their jobs at Starbucks and retail stores. The physical value is being driven by the fact that the world is running a silver deficit for the 7th straight year. You are witnessing a two-tiered reality where the job market is failing, but the technology market is starving for atoms. They want you to see the 16% drop as a crash. I want you to see it as a gift. The elite families and central banks aren't selling their gold. They are using this silver volatility to reallocate their wealth. If you sell your physical silver because the screen says $76, you are handing your educational insurance to the very people who created the labor trap. A fifth grader can see that if the world needs more silver and the mines are producing less, the price has nowhere to go but up once the paper froth is washed out. Having diamond hands in February 2026 means ignoring the employment downturn headlines and focusing on the supply deficit reality. The window to buy silver at these recession discount prices is closing. As the government shutdown ends and the true January jobs data is finally leaked, the realization of the great decoupling will hit the mainstream. Make sure you're on the right side of the fence. Don't let a paper liquidation steal your physical future. Secure your atoms, protect your family, and stay focused on the forensic data. Subscribe to Wealth Unwired. We are the lead investigators of the 2026 reset, and we are here to make sure you see the smoking gun before the vaults are empty.